HIMS and HERS. Health Inc., ticker symbol HIMS, is currently trading at approximately $42.78, relatively flat on the day. Earlier, the price peaked at around $46.51 before pulling back slightly. The company carries a price-to-earnings ratio near 40 and an earnings per share figure of about 0.68, suggesting significant growth expectations are priced in. From a fundamental perspective, HIMS has evolved from a niche sexual health startup launched in 2017 into a broad digital healthcare platform. Today, the company offers services across dermatology, mental health, primary care, and until recently, weight loss medications, including access to GLP-1 compounds like semaglutide and tirzepatide. Revenue growth has been robust, climbing from roughly $149 million in 2020 to over $1.4 billion by 2024. First quarter results from this year showed year-over-year revenue growth of more than 100%. The company now reports having over 2.4 million subscribers, with average revenue per user steadily climbing. However, the regulatory environment is a key risk. In May 2025, the FDA lifted the drug shortage status for semaglutide, effectively ending the legality of large-scale compounding operations under Section 503B. This left companies like HIMS relying on Section 503A exemptions or pivoting to partnerships with branded drug makers. Anticipating this shift, HIMS announced a high-profile partnership with Novo Nordisk to offer branded Wegovy to eligible patients for a monthly cost of around $599. This partnership was seen as a major win for the company and initially sent shares soaring. Quantitatively, the company expected roughly $700 million in revenue from weight loss services this year. That revenue, however, was not all derived from drug sales. HIMS operates a subscription-based model that charges patients monthly fees for consultations, medical supervision, and related digital services. The deal with Novo was seen as a way to secure access to regulated supply while expanding this subscription footprint and legitimizing their weight loss vertical. But in a dramatic turn of events, on June 23rd, Novo Nordisk abruptly terminated the partnership. Their statement accused HIMS of continuing to market and offer compounded GLP-1 knockoffs even after the partnership began, calling such activity both deceptive and non-compliant with US drug laws. This sudden rupture sent HIMS stock down more than 35% in a single trading session, wiping out nearly $2 billion in market value and causing a sharp re-rating by investors. Fundamentally, this is a major blow to HIMS' short-term growth narrative. However, it is not necessarily a death knell. Core services like dermatology, sexual health, and mental health remain stable and profitable. Some analysts argue that HIMS can still emerge as a long-term winner in the digital health space, provided it can pivot effectively, potentially by partnering with other manufacturers such as Eli Lilly for their Zep-bound GLP-1 product, or by building its non-GLP verticals more aggressively. From a technical analysis standpoint, the stock is now trading in the low $40 range after forming a sharp bearish gap from the mid-40s. This kind of gap typically represents either capitulation or the start of a longer downtrend. The relative strength index suggests the stock may now be in oversold territory, which could invite a short-term bounce. However, the massive volume accompanying the sell-off implies there was significant institutional unloading. The next levels of support appear to be in the mid-30s, while resistance now lies firmly above at around $46. Quantitative models that factor in earnings multiples and revenue growth projections are now recalibrating. If HIMS' $700 million weight loss forecast is cut in half or more due to the collapse of the Novo partnership, then full-year guidance may fall short. Assuming current subscriber trends continue, however, the core business can still post revenue growth in the mid-double digits for the next few quarters, albeit at a slower rate than if GLP-1 revenue were intact. Sentiment online mirrors the volatility. Some retail traders on Reddit suggested the weight loss hype inflated HIMS' valuation beyond its fundamentals. Comments like 30% of their market cap was built on fat drugs and kerplunk, there goes the Novo pump, illustrate how investors were pricing in rapid growth from this channel. The pullback then reflects a reversion to pre-GLP expectations. Looking forward, investors should watch closely for any announcements around new partnerships, regulatory guidance from the FDA on compounded drugs, or product expansions into other chronic care areas. There is still a strong brand and subscriber base here, and HIMS continues to show a unique ability to monetize healthcare via a direct-to-consumer model that many traditional providers have failed to replicate. To conclude, HIMS and Hers Health remains a fast-growing but now much more controversial digital health stock. The loss of the Novo Nordisk partnership is a material headwind, both in real revenue impact and in investor confidence. Yet for long-term investors who believe in telehealth, consumer medical platforms, and brand power, this may represent a compelling entry point, assuming the company can stabilize and re-accelerate growth through alternative channels. HIMS's future depends on how quickly it can pivot, restore trust with partners, and capitalize on its massive user base. If you enjoyed this deep dive and want more timely breakdowns on high-growth and high-risk stocks, don't forget to smash that like button and subscribe to the channel. Drop a comment below with your take. Are you buying the dip on HIMS or waiting for more clarity? Thanks for watching and see you in the next video.